Mark, so good to see you. I'm glad you have time today because I was hoping to dive into the headlines, talk through markets and geopolitics. As everybody knows, rising tensions in Iran have pushed oil prices higher and created short-term volatility in the markets. Historically, however, geopolitical conflicts tend to have only a temporary impact on stocks. When we take a look at the 1 week performance of the S&P, we still see a lot of green on the board, some red as well. But Mark, why do we tend to see stocks fall first when tensions rise?
Well, I think, Erin, it really boils down to the concern of what the risk is, and then everybody's kind of knee-jerk reaction is to sell without really asking questions first. So
Yeah.
we always see this kind of shock of volatility really to the downside initially when we have these geopolitical events. But I think the big thing is that as investors, we have to kind of step back, keep our wits about us, and really we have to stick with the plan. Most investors don't have a written retirement plan, but if we understand what the plan is, what those plan logistics are, it should be built to be able to weather these types of events.
Right. Well said. And I know that you are a student of history, so let's take a look at some historical events and the S&P's performance. As we see here, several events and mostly short, shallow pullbacks. Explain what we're looking at, please.
Yeah, so it's kind of interesting. So, I mean, if you go back all the way to the Korean War, and that was in 1950, but if you look at all of these events, obviously at the front end of every conflict that we've been through, you have an initial drawdown, meaning markets sell off. But ultimately, as time goes by, when you look at 30, 60, 90 days going out, as far as 250 trading days, actually there was 12 events that are geopolitical downturns or conflicts that happened since 1950. And really, there was only 2 out of those 12 that we had negative returns after 250 trading days. So in most cases, the market does recover. And in most cases, it's going to recover within less than 100 trading days.
Such an important perspective. So for investors then who are watching these headlines and rising oil prices, what's the most important perspective to keep in mind before making any portfolio decisions?
Well, like in anything that happens in life, I think, especially in this, we can't just make knee-jerk emotional
Right.
reactions because, right now everything is negative. We're getting bombarded with negativity. Negativity sells in the media, but we have to come back and say, okay, well, we either did some things to get defensive before these events happen, but this is really the balanced approach I look at it like having offensive, like you're running a football team. You got to have a good offense, but you have to have a good defense. And especially in retirement, because we can't afford to fall off the cliff or go off the rails. So we have to have a good balanced approach, good diversification, and some tactical things to manage those drawdowns when they occur. We just don't know when they're going to occur. But the worst thing we can do is make emotional decisions in the moment, and really we need to step back and kind of logically think about that and go, hey, is this really a time to be changing things, or really is our plan built to weather this storm? And it
Right.
should be built to do that.
Right. You bring up so many good points. And I'm really glad you brought up the fact that we as humans tend to lead with how we feel in the moment as opposed to being guided by the data. Can you just explain how emotional investing tends to lead to bad financial decisions?
Yeah, so it is interesting because we want to make decisions logically, but really we're emotional beings. So we make them from an emotional standpoint. We try to back them up with logic. But you can see in this chart from an investor standpoint, and there's many studies that were done, and this really explains it because Dalbar did a study going back to the early 80s, and they said, hey, the markets have done 6 or 7%, but the average investor has done less than 2%. And what we can see is that we get to this euphoric level where we think, hey, everything's good. Let's start investing. Let's start piling on. This thing's going to go higher. But then it doesn't. We have a drawdown, and ultimately we get into denial, anxiety, fear, ultimately capitulation. This is a pure good example of what happened in 2008. We sell at the bottom, and then the markets come back and we're still despondent. We're like, oh, I don't know. I think it's going to turn over again. And there were many people that did that. They sold everything, even through COVID. In COVID, it only took the market 103 days to recover, and people were sitting in cash and they missed it.
Mm-hmm.
But again, it's all about understanding that you have to have that plan and you have to have that proper diversification, that proper defense in place so that we don't have to deal with the emotional roller coaster of our own selves, because a lot of times it's us getting in the way, so to
Yeah,
speak. And
absolutely.
yeah, by having a good team, a good advisor on board that can be objective, that's going to keep us in the ball game when we need to be in the ball game.
Exactly. Having that plan leads to peace of mind as
Yep.
opposed to these knee-jerk emotional decisions. So, Mark, if somebody doesn't have that plan and would like to sit down with you to create it, or maybe they do have one, but they're feeling stressed, that means it's probably not in line with their risk tolerance, and they'd like to come to you for a second opinion, how can they reach you?
Yeah, so they can just give us a call. Our phone number is 303-681-0113. Anybody on our team would love to chat with you. We can set up a Zoom call, in-person meeting if you're concerned about these types of things or whatever it may be. We'd love to have that conversation. Or you can go to our website, McGregorwealth.com. There's a number of different resources there, and you can easily go to my calendar and set up an appointment or a phone call or whatever you'd like. And we'd love to chat with you and really help you through some of these issues that you may be having or concerns that you may have.
Great. Mark, thanks for your time today. I appreciate it.
All right. Thank you, Erin.